Let's talk about the US national debt, a number so huge it's almost impossible to grasp $37 trillion. That's a 3 and a 7 followed by 12 zeros. If you tried to count to it, you'd need to start before civilization and still not finish today. Politicians love to use this number to scare us, but then quietly add to it when no one's looking. We imagine the country's debt like a giant credit card bill, with a repo man ready to take the Lincoln Memorial. But is it really that simple? Is the debt a ticking time bomb or something more complicated? Today we'll explore what would happen if America actually paid off every penny of its national debt, and why that might not be the paradise you'd expect. Buckle up. The truth about the national debt is stranger than you think. The national debt is the total amount the US government has borrowed over the years to pay for things when it doesn't have enough money from taxes and other income. Think of it as the government's giant credit card bill, a running total of all the money it owes. This debt is made up of money that hasn't been paid back yet, and it keeps growing every time the government spends more than it brings in. Each year, if the government spends more than it collects in taxes, it borrows the difference, creating what's called a budget deficit. These deficits add up year after year, and together they form the national debt. The debt is the sum of all those annual deficits, stretching back through history. It's like stacking up every unpaid bill the government has ever had. But unlike your personal debt, the government's debt is unique. It doesn't just owe money to banks or credit card companies. Instead, it owes money to a wide mix of people and institutions, including, surprisingly, itself. For example, agencies like Social Security invest their extra funds in government bonds. So a big chunk of the national debt is actually owed to ourselves, the government borrowing from its own trust funds. The rest of the debt is held by the public. This includes regular people who buy savings bonds, pension funds that invest for retirees, banks, and even foreign governments like China and Japan, who see US debt as a safe place to park their money. Why do all these people and institutions buy US debt? Because US Treasury bonds are considered one of the safest investments in the world. The US government has never defaulted on its debt, so investors trust they'll get paid back with interest. So, the national debt isn't a single giant loan from one lender. It's actually made up of millions of loans, big and small, held by investors all over the globe. Each bond is a promise to pay back money in the future. When you hear about the national debt, remember it's not just a scary number on a screen, it's a complex web of trust, built on America's reputation for paying its bills and honoring its commitments. That trust is what keeps the entire financial system running smoothly. As long as people believe the US will pay back what it owes, the system works. But if that trust were ever lost, things could get messy fast. Investors might panic, interest rates could spike, and the government could struggle to borrow money. For now, though, the world still believes the US is good for the money. And that's what keeps the wheels of the global economy turning. The United States borrows money in a unique and powerful way, by selling Treasury securities. These are essentially government IOUs, issued in the form of bills, notes, and bonds. When you hear about the US borrowing, it's not about taking out a loan from a bank, but about offering these securities to investors around the world. Investors, ranging from individuals to massive institutions and even foreign governments, lend their money to the US government by purchasing these treasuries. In return, the government promises to pay them interest at regular intervals, and to return the original amount, or principal, when the security matures. This process is repeated constantly, creating a steady flow of funds. US Treasuries are considered the world's safest investment. This reputation comes from America's immense economic strength, its long history of honoring debts, and its unique ability to print the world's reserve currency, the US dollar. Investors trust that the US will always pay them back. These bonds aren't just important for America, they're the bedrock of the entire global financial system. Central banks, pension funds, and governments everywhere hold US Treasuries as a core part of their reserves, relying on their stability. The interest rate on Treasuries, often called the risk-free rate, sets the benchmark for almost every other interest rate worldwide. When Treasury rates move, so do rates on everything from savings accounts to corporate loans. That means your mortgage, your car loan, and even the financing for small businesses all trace back to the Treasury rate. The cost of borrowing for everyone is linked to what the US government pays to borrow. The US debt market isn't just about government borrowing, it's the hidden plumbing of global finance. Money flows through this system, connecting banks, investors, and governments in a vast, interconnected network. That's why debates over the debt ceiling cause so much panic. If the US ever threatened to default, it would shatter trust in the system and send shockwaves through economies everywhere, potentially triggering a global crisis. The borrowing process itself is straightforward, but the stability it provides is absolutely critical. Without it, markets would lose their anchor, and uncertainty would ripple across the world. If the US suddenly stopped borrowing, the entire financial system would have to be rebuilt from the ground up. The consequences would be unpredictable and far-reaching. That's why the world's eyes are always on America's finances. Every policy change, every debate, and every decision is watched closely by investors and governments everywhere. The US debt is more than just a number on a screen. It's the backbone of modern finance, supporting economies and investments across the globe. Remove that backbone, and everything changes. The entire financial world would have to adapt, and the effects would be felt by everyone, everywhere. The US wasn't always drowning in debt. Major wars like the Civil War and World Wars caused spikes, but post-war booms shrank the debt's impact. The real surge began in the 1980s, with tax cuts and increased spending making deficits the norm. Both parties contributed. Republicans cut taxes, Democrats expanded programs, and the debt kept rising. Crises like the 2008 financial meltdown and the COVID-19 pandemic forced the government to borrow trillions more to prevent economic collapse. These weren't reckless sprees, but responses to emergencies and long-term promises like Social Security and Medicare. As America ages, these costs will keep rising, pushing the debt higher. The $37 trillion debt is the result of decades of choices, crises, and commitments. It's not one bad decision, but a long accumulation. The real challenge is managing what comes next. The debt is a reflection of our history and our future obligations. It's not going away without major changes, and those changes would be anything but painless. Imagine, for a moment, a movement so ambitious and determined that its sole purpose is to pay off every last cent of America's staggering $37 trillion national debt. It sounds almost impossible, but let's explore what it would actually take to settle this colossal tab. How could such a feat even be attempted? What steps would need to be taken, and who would bear the burden? Realistically, there are only two main options. Either raise taxes to unprecedented levels, or slash government spending to the bone, perhaps both, and on a scale never seen before in American history. Taxes wouldn't just go up for the wealthy. Every American, especially the middle class, would see their rates skyrocket. For many, income tax rates could even double, shrinking paychecks and straining household budgets. On top of that, new national sales taxes would be introduced, making every purchase, from groceries to gas, more expensive for everyone, every single day. When it comes to spending, the government would have to make deep, painful cuts. Social Security and Medicare, programs millions rely on, would be slashed. The military budget would face not just reductions, but massive, sweeping cuts. Most other government programs, like maintaining roads, funding parks, or supporting scientific research, could disappear entirely, leaving communities without basic services. In reality, it would require a brutal combination: sky-high taxes and gutted public services, forcing Americans to make sacrifices at every turn. The result? Austerity measures so severe they would reshape daily life. Imagine empty shelves, shuttered businesses, and long lines for what little assistance remains. It would feel less like a financial plan and more like fighting a war, a relentless struggle. But this time, the enemy is our own budget. Every dollar would be scrutinized, every program questioned as the nation tries to claw its way out of debt. The political and social fallout would be enormous. Protests would erupt, politicians would clash, and headlines would scream of unrest and division. Every American from every walk of life would feel the pain. Families struggling to pay bills, seniors worried about their future, and communities facing tough choices. The country itself would be transformed, its landscape and spirit changed by the sacrifices demanded. Paying off the debt isn't just hard, it borders on unimaginable. The sheer scale of what's required is overwhelming. The sacrifices needed would shake the nation to its very core, testing the resilience and unity of the American people. And the ripple effects wouldn't stop at our borders. The world's economies, markets, and leaders would all feel the shockwaves. The world would watch, and the consequences would be global, reminding us that America's debt isn't just our problem, but a challenge for the entire planet. If the government actually paid off the debt, it would shrink dramatically. No more big social programs, no more global military presence. The relationship between citizens and government would be rewritten. Millions of government and private sector jobs would vanish. The government's ability to respond to crises, hurricanes, pandemics, recessions, would be crippled. Relief packages and safety nets would disappear. Some would cheer a smaller government, arguing it means more freedom and less waste. But the loss of support and stability would be profound. America would be a very different country, leaner, but far less secure. What would a debt-free America mean for you? First, U.S. Treasury bonds would vanish, removing the foundation of the global financial system. Banks, pension funds, and investors would scramble for a new safe asset, causing chaos and volatility. Interest rates on everything, mortgages, car loans, business loans, would swing wildly, likely rising. The massive tax hikes and spending cuts needed to pay off the debt would trigger a deep recession or depression. Jobs would disappear, paychecks would shrink, and retirement savings would be thrown into turmoil. In theory, a debt-free government could eventually lower taxes, but only after years of pain. The transition would be brutal, with unpredictable consequences. The disappearance of the $37 trillion bond market would send shockwaves worldwide. For ordinary people, the cost would be immediate and severe. The benefits, if any, would be a long way off. Let's weigh the pros and cons of a debt-free America. On the plus side, no more interest payments, hundreds of billions saved each year. The risk of a fiscal crisis would vanish, and private investment might surge. In theory, the economy could become more dynamic and innovative, but the process of getting there would be catastrophic sky-high taxes, gutted services, and a global financial meltdown. Unemployment would soar, businesses would fail, and the social safety net would vanish. The destruction of the Treasury bond market would destabilize the world economy. The cure would be far worse than the disease. Paying off the debt sounds good until you see the price. Sometimes the status quo is the lesser evil. So, is paying off the entire national debt a good idea? Almost certainly not. For a country like the US, debt isn't like a household mortgage. It's a tool that supports the global economy. The real issue isn't the debt size, but whether it grows faster than the economy. The danger is runaway debt that crowds out everything else, not the debt itself. The goal should be to keep debt manageable, not to eliminate it. That means smart choices about taxes, spending, and economic growth. The national debt reflects our history and priorities. It's not just a number to erase. The shocking truth, paying it off would do more harm than good.